Hello and welcome back to another episode of the For the Property Investor podcast. With full voice capacities recovered, thankfully, and of course we've got the only man that brings us the news is Nick Bendel. Welcome, Nick.
Thank you for having me, Owen. I'm looking forward to chatting with you, and I'm glad to hear you're back to 100%.
Yes, pretty much. It's as 100% I am. As I can call it at this stage. So I'm happy for now.
So it sounds like maybe you're only 99%?
99.5, maybe 99.8, something like that. So still the odd crook. Recovery there.
Okay, well, your 99.8% is a lot better than other people's 300%.
Oh, thank you, Nick. Jeez, you're such a kind man.
My pleasure. And if that doesn't improve your health, nothing will.
All right. And how are you doing this week? What have you been up to?
What have I been up to? Well, in the past week, and this is kind of a typical week for Hunter and Scribe, my business, we write content for finance and property professionals. And over the past week, we've written LinkedIn posts for an accountant, a media release for a mortgage broker, a blog for a commercial finance broker, an email newsletter for a buyer's agent, and website content for a financial advisor. As I said, that's a pretty standard week for us.
Okay. Sounds like fun. So thankfully for us, nothing too exciting. We've had a normal, boring week in property management, which is actually a good week. So we've just been helping lease a few properties for a few of our clients, and making sure everyone is happy in their house. So where they're living. So just a normal week in property management.
Well, I've got a property management question for you.
Hit me.
I've got an investment property in Hobart, and the tenant has moved out. So my property manager is looking for a replacement. And on Friday afternoon, I was sent 2 leading candidates, and I was asked to choose. And I replied saying both look good. Who do you think is a better candidate? I'm just wondering, with your business, Leifield, I know you operate in 5 states. What process do you follow when it comes to tenants? Do you just say to your landlords, here's a list of tenants you choose, or do you try to offer some guidance? How does it work?
Yes, well, if we're lucky enough to have a 2 or 3 or let's call it multiple good applications, then yes, more often than not, we will leave it up to the owner to choose. If we think there's one that's in particular that's more of a standout, yes, we will put that recommendation forward and give the reasons why. And sometimes it's just maybe feedback from our property manager at the open home and the inspection, or it might be something on their ledger, or it could be one of a number of things of why we might put one person forward rather than the other. But some owners like to be very specific and make their own decision based on the paperwork provided, and others will leave it up to us.
Well, I guess it's up to each investor to decide how they want to play things. From my perspective, I feel like my property manager is an expert. They know more than me about property management. And in this specific situation, they certainly know more about the candidates than me because they've met them and I haven't. And it would seem strange for me to want to second guess them in that situation, but that's just how my brain works.
And even though Tasmania is not a state that we operate in, I do keep an eye on all markets. And yes, the Tasmanian market, especially with Hobart and Launceston, is is a market that's looking at some good long-term growth. And so, yeah, stay tuned. Hopefully, you're someone that benefits from that, Nick.
Well, I have indeed. Over the decade that I've held the property, it's doubled in value and the rent has gone up significantly. I think maybe 50, 60% or so. It goes to show the benefits, not so much of timing the market, but time in the market.
Correct. Well, let's get into it. What's in the news this week, Nick?
Our first story today is property market experiences momentous shift. Brisbane is now the second most expensive capital city market after Sydney, according to Cotality. Brisbane's median house price has increased 76% since 2020 and is now at 1.01 million. One of the biggest driving factors of the Brisbane house market has likely been a surge in demand from a shift in interstate migration, with the greater Brisbane population growing by 9.2% over the past 4 years, Cotality said. The rapid boost to Brisbane's population growth at a time of constraints on housing supply is likely what led to a substantial boost in values and urgency in the housing market. However, Cotality said that because Brisbane is now no longer as affordable as it once was, interstate migrants might target other cities, which would put downward pressure on Brisbane prices. So, Owen, Brisbane's median house price is now $63,000 higher than Melbourne's. Could Brisbane remain ahead of Melbourne over the long term, or will Melbourne inevitably overtake Brisbane at some point?
No, I would expect that Melbourne would eventually overtake Brisbane at some point in the future, and probably in the near future. There is a lot of demand in the Melbourne market. There are some pockets of high supply as well. But Melbourne is, population-wise, our second largest city. It's got a lot of room to grow, and it's predicted to grow quite dramatically over the next 5 to 10 years. So it's something that yes, there's a lot of issues in the Melbourne economy and the Melbourne market, but we will see that there's a lot of demand, which will probably push up prices. So it's overdue for growth. All of the feedback I get from people on the ground in terms of buyers agents and sales agents is that you need to be pretty careful about where you are buying, and it's because there's very good value in some areas, but others, you wouldn't touch.
Over the past 5 years, if we look at the median dwelling price, not house price, but dwelling price, the median dwelling price over the past 5 years has increased 75.1% in Brisbane, but only 14.3% in Melbourne. Why has Melbourne performed so poorly over the past 5 years?
It's been an issue of state government policy in Victoria, with implementing new taxes on investors, especially, but all property owners, and as well as some fairly strict laws that were unfavourable to investment owners.
Cotality suggested that interstate buyers with limited buyers might now choose other locations over Brisbane. Would you expect that to happen, Owen? And if so, which locations?
Yes, definitely seen it happen. And yeah, Melbourne is one of those markets that has become a lot more popular in the last 12 months. And I thought it would have gone off a lot quicker in terms of it being more of a red hot market. But people are seem to be hearing the caution and choosing carefully. But we have seen a lot of dramatic increase in activity in the Melbourne market with investors. But apart from that, there will be a number of other areas So that across the country, probably maybe more regional areas outside of the capital cities. So areas like outside of Sydney, Central Coast, Newcastle, Hunter Valley is still very popular. If you're looking in Queensland, regional Queensland areas like Townsville, Gladstone, Toowoomba, are still quite popular. But the Perth market, as well as the Adelaide market, even though they've both been quite hot in the last number of years and have cooled down a bit, there is still quite a bit of activity and some good value there. This is what I'm hearing from the buyers agents on the ground.
Okay, interesting. We've been talking, of course, about the sales market, and we've discussed how Brisbane's sales market has experienced considerable change over the past 5 years. Has something similar happened in the rental market?
Yes, rents in Brisbane have risen quite dramatically in the last 5 years, especially. And but we're seeing a leveling off of that, as we've spoken in past weeks about uh, rent increases starting to slow down quite dramatically. Yes, we saw a dramatic increase in Brisbane, but that's been leveling off fairly well.
Well, that leads us on to our next story. We're going to go with a different theme for our second story, which is unemployment hits three-year high. Australia's unemployment rate has hit its highest level since 2022, rising from 4.1% in May to 4.3% in June, according to the Australian Bureau of Statistics. Although the number of people in work increased by 2,000, the number of unemployed people rose by 33,600. Furthermore, although the part-time workforce increased by 40,000 people, the full-time workforce decreased by 38,000 people. This is a big shift after months of relatively stable job figures and puts the unemployment rate where the RBA had forecast it to be at the end of the year, but 6 months early. This will add to expectations of a rate cut in August, especially if the upcoming inflation data shows that inflation remains within the RBA's target band. So, Owen, on its own, a rise in the unemployment rate from 4.1 to 4.3% is meaningless because the figures bounce around from month to month. But do you think this is the start of an upward trend?
It might be a short-term issue. It's really something we don't know until it happens. It's you can really only predict within 3 months, and then half the time you're right and half the time you're wrong. So it's hopefully unemployment doesn't rise too much further, because yeah, that'll have other negative effects on the economy. But yes, the positives out of that is maybe rate cuts to help stimulate the economy. So yeah, we probably needed to see this start to happen, but as you've said, it's happened a little bit sooner than expected. It might be a one-off anomaly. We won't know till the next round of figures come out.
It's interesting that, of course, 4.3%, even though it's the highest in 3 years, it's still historically quite a low figure. But Australia has recorded negative growth in per capita terms for 7 of the past 8 quarters. So why do you think unemployment is still so low, even though the economy has been so weak?
Because we do have a shortage of workers in this country, especially in the trades. We've got a lot of high demand for particular industries, and so those people who are migrating to the country is they're getting employed fairly quickly. So it's so that's not a bad thing. It's what's keeping um, our economy growing in a totality. But yes, we've still got the issue of, on a per capita basis, um, uh, individuals are not feeling the benefits of that. Um, and because costs are still increasing, the wages aren't increasing at the same rate, and yeah, it's an issue for the everyday person in Australia.
You referred a couple of minutes ago to potential rate cuts. NAB expects the RBA to make rate cuts at 3 of its next 5 meetings in August, November, and February. Does that sound plausible to you?
Yeah, plausible. It's I think at least two, possibility of three. Again, everyone's guessing here until it actually happens, or we're within a few months off where we can see what the figures are, and it would give us a good indication. But it's I see at least two rate cuts, and whether that's a double cut in one, and then maybe a second rate cut on its own at 25 points. We'll have to wait and see.
And of course, I know you want them to do a cut of 15 points at some point, so we get back to the 25 increments.
Yes, I think that's very prudent. So if we need to get back to it's 10 points technically.
10 points. Okay.
Yeah. So we need if we did that 35 basis points drop instead of a whole double cut of 50 points, then that sort of will put things back on track. Um, in nice, neat quarters, and but it'll also give you a little bit more stimulation without having to do a full double cut.
Could that be why the economy is weak? It's just a bit confused by the fact that the cash rate is not in these increments of 25 basis points, and therefore the economy doesn't know how to behave.
No, I wouldn't go that far. Yeah.
Well, let's go to our final story today, Owen. Bureaucrats pour cold water on government housing target. Treasury advised the federal government after the election that its target of building 1.2 million homes in the 5 years to June 2029 would not be met, according to briefing notes accidentally sent to the ABC. Housing Minister Claire O'Neil, quote, was presented with a range of options to support the construction of more housing, including using the migration and skills system to boost the construction workforce, and using its existing policy of grants to states and territories to better leverage them to boost building rates, the ABC wrote. Treasury also briefed the minister on the dysfunctional funding model for the infrastructure that enables the construction of new housing, such as pipes and sewers. Owen, are you surprised to learn that Treasury believes the government will not meet its housing target?
No, I'm not surprised that Treasury can sort of use their fingers and toes to be able to add up properly. And it's I think Blind Freddy down the pub could have told you that. I'm probably more surprised that they came out and admitted it in public. Um, and so no, not at all. Not surprised. I think within about 2 weeks of the government announcing their housing target, everyone went, yeah, nah, this isn't going to happen.
Well, it's interesting how the ABC learned of this. The ABC filed a Freedom of Information request, and usually when these are delivered to the media outlet, this sort of juicy stuff is redacted. And if I remember correctly, Treasury did redact it when they sent it to the ABC. So this information quoted in the story was not in what was sent to the ABC, but then they also accidentally included the headings in the document, and the headings were what revealed the juicy information. And then once Treasury realized it had accidentally not redacted the headings, it tried to recall the email, and the ABC said, no, the email has already arrived in our inbox. So we will be publishing that. So Treasury didn't publish this, well, not deliberately anyway.
Right.
That's why this is now out.
Well, that makes sense.
Yeah, but as you say, they can count, and they've realised that the government's target doesn't appear to be realistic. And so they've suggested some other ideas to the government about increasing the supply of housing. And what do you think, Owen, of Treasury's suggestion that we adjust our immigration system to increase the construction workforce?
Well, that's isn't that common sense? Yeah, it's it's a absolute agreement there. It's I don't think anyone would argue with that. I think the government would say, "Oh, well, yes, that's still one of our priorities." But it's yeah. So I'm under the assumption, and I thought the knowledge that that was already happening. So if it's not, then it's it's a no-brainer.
Well, if we're going to bring in more, say, builders and tradies, do you want the migration intake to be increased, or do you want a higher share of the existing intake to go towards people with these construction and construction related skills?
Well, I think number one, in the short term, our immigration in total needs to be decreased to be able to take the load off the current housing supply. But any increase we any intake we do take uh, needs to be very carefully chosen in terms of yes, construction workers should be number one, and but then there's a number of other um, professions that we need more workers in as well. So um, we know that Treasury and the Immigration Department are aware of all of those professions, but it's kind of red hot urgent to have more construction workers.
What do you think about another one of Treasury's suggestions, which was that Canberra should use the power of the purse to incentivise states and territories to build more and build faster?
Well, I think, as I've said previously, all levels of government should be working together to, number one, cut red tape and make it easier for approvals to get through, and secondly, try and reduce the cost of builders and developers to be able to get these houses built quicker and cheaper and easier. And so instead of forking out more money, um, let's make it cheaper with putting a hold on some taxes or having some tax reform in terms of property taxes that hit the construction portion uh, and approval process of getting these houses built, because that's just a barrier to entry, and we need to lower those.
The 5-year period for the government's 1.2 million new homes target started in July 2024. And I remember the two of us were talking about it, not just from July 2024, but in the months before, because there was a bit of a lead in to the policy starting. So we've been talking about it before, and we've been talking about it in the year since the 5-year period started. And the whole time we've been saying it doesn't look like they're going to hit the target of 1.2 million homes. It's interesting that this Treasury information has accidentally come out. What I'm wondering, though, is once we finally get to the end of the 5-year period in June 2029, what are the two of us going to talk about?
I'm sure there'll be lots of other things for us to talk about, Nick.
Well, we still have 4 years to go, so we've still got a bit of content to come, and really enjoyed today's discussion as always, Owen. Thank you.
Yes, and I assure you there will always be issues of supply and demand somewhere in the property market. All right. Thanks, Nick, for joining us again and bringing us the news, and we'll see everyone next week. Thanks.